Hi, good week to all. This is Kelvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices, where I'll be sharing with you all the usual trend bias for the week, as well as the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 stock indices for the week of 11th of July to 15th of July 2022. So before we start, let's take a look at the disclaimer slides first. All right. So before we jump into the various key technical chart, I want to share with you all the momentum analysis across the globe for the major stock indices from US, Asia, as well as Europe. So as you all could see that last week performance, the major US stock indices from the SPX 500, the growth-oriented Nasdaq 100, the Dow Jones Industrial Average, as well as the small cap Russell 2000, all of them ended the week in the green, with the top performer being the growth-oriented Nasdaq 100, which is up for the week with a weekly gain of 4.66%. So that's actually a stark outperformance or a improvement versus its prior week of negative performance, where all of them actually ended in the red. And also, if you could look at the momentum trend, so this momentum trend is actually taking the trend difference, the difference across close to seven previous period, where I get the difference from the we call it the latest weekly performance minus of the prior 4 week average weekly performance. So as you could see that the momentum trend also starts to improve based on last week performance after a slight dip across the board for the US major stock indices. Then what I'm going to highlight over here is the Hang Seng Index and the Hang Seng Tech Index, which is equivalent to which is the proxy of China big tech stocks. They are actually the weakest performer last week. Both of them ended a negative 0.61%, and the Hang Seng Tech Index ended with negative 1.27%. But that's not pretty surprising. If you recall the previous 4 to 5 weeks performance, they're actually the outperformer among the globe. So what we could see over here is that some signs of a pullback and consolidation is in store for these two China-related benchmark stock indices. So what we could see is here that the momentum trend has already starts to slow down as well, indicating a bit of sideways consolidation for these two indices, which is the Hang Seng Index and the Hang Seng Tech Index. So what I could see over here is that for the Nikkei 225 last week, it actually did fairly better compared to the prior week performance, which is at a positive weekly gain of positive 2.24%. And with that in mind, taking into account of last week performance versus its prior 4 week average, we also have a kind of a rather positive momentum as well. So we could see that the momentum trend has already started to improve on the Nikkei 225. But later I'll share with you all the overall bigger picture for the Nikkei 225 from a multi-month perspective is still trading within a sideways trend. So what we could see over here is that this is short-term trend momentum, but we got to analyze the bigger picture as well, whether the bigger picture is trending upwards or trending sideways to give us a gauge on a multi-time frame perspective. But what's interesting over here is the German 40 index, we call the DAX. So initially, the DAX actually started the week on a very weak footing. On top of that, because of the fear of this Eurozone energy crisis, and also which is the Russia there's this talk about a renewed fear from Russia actually shutting off the gas supply for to Germany, whereas Germany is pretty much heavily reliant on gas Russia energy exports. So and that also give rise to a fall in the euro, where the euro is now coming very close to parity against the dollar. But what's interesting over here is that last later part of the week on Thursday, Friday, the DAX actually kind of give a stunning or a resounding late recovery at the end of the week. Towards the end of the week, managed to inch out a positive return, weekly return of 1.58%. So that's actually a stark contrast with a dismal prior weekly performance of negative 3.33%. And you take into account of the trend momentum, the momentum trend also starts to improve. And if you look at among the major indices that I highlight over here, in fact, their momentum trend is the one that is rapidly increasing or rapidly showing signs of improvement in the shorter term instead. So that's pretty much a sign of a promising technical factor amid this ongoing current negative news flow that is being fed into the market. Do not forget, markets are always forward-looking in nature. So now, without further ado, let's go into the technical chart of the various benchmark indices that I will share for you all for this week. So let's us start off with the SPX 500 first, which is the US stock indices. So if you look at the US stock indices last week, it actually did a recovery or a push up as expected, but still holding below the upside trigger level of this level over here, which is at 3,945. If you look at 3,945, what is it? It's actually the former swing high, the swing high area, not the former, the swing high area of 28th of June and as well as 27th of June, as well now confluence with the 50-day moving average. So in order to see further upside initial, for sure, the SPX 500 got to have a breakout above this 3,945 level. So on the weekly strategy, which if we go down to the 4-hour chart, so the strategy is still pretty much unchanged. So yesterday it did a pullback right below 3,945. So I'll be still using the 3730 medium term pivotal support level that was mentioned in the previous week. No change for that level. So as long as this level holds, a break above 3945 potentially could take us higher towards the top of this short term ascending channel that I draw from the low of 20th of June, which is at 4075, and as also confluence with this lower boundary of this descending channel resistance from the high of 30th of March that is still acting as a cap on the previous rally that was seen on the SPX 500. And also do take note that the 4-hour RSI is now coming very close to a prior support level, which is at the 33% level, very close to the oversold level as well. So indicating to us that yesterday's pullback may be coming towards close to a inflection point where we could start to see some signs of a we call it a bullish momentum start to resurface again on the SPX 500. But nevertheless, the key support level to watch for this week to maintain that bullish bias will be 3730. But if we start to see a 4-hour close below 3730, we will see another whipsaw like of a choppy decline back to retest the major support level at 3610 slash 3580 on the SPX 500. So on the Nasdaq 100, also pretty much the same. If you look at Nasdaq 100 last week, it shaped that bullish breakout, but however, not bullish, the bullish up move that's our preferred view. So, but however, it still fails to break above the 12,180 what we call it upside trigger level where it tested on Friday or on Friday, pardon me. So that's actually the swing high of the 27th of June and now confluence with the 50-day moving average. So that is a pretty much key level as well to watch to see whether or I would say that to give the Nasdaq 100 a further push up or an initial to actually reinforce this ongoing multi-month tactical rebound, which is our preference scenario for this coming Q3, at least in the first half of Q3. So now for the strategy chart for this week on the Nasdaq 100, so still pretty much remains unchanged. It's still oscillating within the short-term ascending channel that I draw from the low of 17th of June 2022. Still last yesterday's pullback now coming very close to the lower boundary of this channel support, which is the minor support at 11,650, and whereas the RSI, 4-hour RSI also coming very close to a to its oversold level, which is at the previous minor support level, which is 31%, and the oversold level at 30%. So all in all, what it means that over here is that last night's or last yesterday's pullbacks is coming very close to inflection level where we may start to see some signs of bullish momentum coming back into the picture again. But the key level to watch for this week to maintain that bullish bias will be 11,280, and the level in order to give it an extra to push it to the upside will be the upside trigger level of 12,180. A break above this level should potentially take us up towards the next resistance at 12,450, followed by 12,770, which is the upper boundary of the short-term ascending channel, as well as the the minor range resistance of 6th of June and 8th of June. But however, if we start to see a 4-hour close below 11,280, then we will start to see another choppy decline to test this key major support zone at 10,960 slash 10,670 on the Nasdaq 100. So now the next one will be the Hong Kong 50 index, pardon me, or the Seng index, we call it in short. Okay, so if you look at the Hong Kong 50 index, all in all, right, since 15th of March 2020 low, close to about 4 months, 3 months plus already, it's been oscillating in this kind of ascending triangle configuration. And last Friday's pullback now is coming close to this lower boundary of this ascending channel, ascending triangle range support, which is at 20,470, and also the RSI now also dipping back towards this ascending trend line support, which is corresponding it, I think, at support at 33%, which is so close to the oversold region at this 30%. So all in all, right, still no change in the strategy. Last week we used 2047 to be bullish in any dips, bullish buys any dips above 2470. Still expecting it to oscillate within this ascending triangle range configuration for a pushback up. Right now for this week, at least to retest the upside trigger level at 22,640. But however, if we start to see a bearish breakdown, a 4-hour close below 20,470, then potentially we could see a multi-week of kind of a very choppy decline to retest the 12th of May 2022 swing low area at 19,165 for the Hong Kong 50 index. All right. Now moving on next with the next we call it Asia indices that Asia index that I like to share with you all will be the Japan 225 or the Nikkei 225. So overall, before we jump into the strategy chart of the Nikkei 225, let's give it a time to load first. Okay, so this is the daily chart that I'll share with you. Also, if you look at, even though the short-term momentum has been improving last week, right? But overall, right, since the 8th of March 2022 low at this 24,480, 24,180 level, it's still been trading in a very complex sideways range configuration, unable to break above this descending trend line resistance that is drawn from its we call it decade high of September 2021, and as well as this former pullback, we call it the pullback resistance of this former we call it former range ascending range support that previous rally actually failed to have a proper breakthrough. As you can see over here, there's a bearish reaction on 8th of June 2022, and also the RSI is still trading kind of a cap below this descending resistance at corresponding descending resistance at the 62% level. So all in all you could see now over here is that yes, last week we see a push up. That's we call it a sign of we call it short-term momentum that is improving, as shown on my earlier momentum trend analysis. But however, in the bigger picture, or from a we call it a medium-term trend perspective, is still trading in a complex sideways range configuration. So for the 4-hour strategy chart that we kind of use it to actually as a gauge for our weekly strategy on the Nikkei 225, is that we're still expecting it to kind of a uh, be range bound again, but short-term momentum has been improving. Why? Because as you could see from the low of 18th of June, it's been trading in a series of higher lows. All right, so we're still using 25,535 as my key medium-term pivotal support. No change for last week. Potentially looking for another push-up to retest this descending trend line resistance, as well as the swing high area, the minor swing high area of 28th of June, conferencing at 27,280 slash 27,500 resistance. But however, if we see a 4-hour close below 25,535, then potentially we could see a further drop towards the next support level to retest the 8th of March 2022 swing low area at 24,500. So that is considered as a major range support level, right, for the Nikkei 225. Now, moving on next to the German 40 index, or the DAX we call it. So you can see that the DAX itself, in the later part of last week, which is starting from Wednesday, it did a remarkable we call it a rebound after a test. A retest on the 7th of March 2022 low at 12,430. So that's also our key medium-term pivotal support we have last week to actually anticipate that potential rebound, which actually it tested and stripped that bounce, indicating that that bullish scenario that we have for last week still remains intact because it didn't have a decisive close below 12,430. And also the 4-hour the daily RSI also starts to actually find some support at this 31% level, which is also close to the oversold region as well. But however, on the upside, right, we could see this key medium-term resistance at 13,680, 13,900 is a barrier that this German 40 index got to break through to actually see a more pronounced recovery, at least from a 1 to 3 months perspective. And also that with this we call it key medium term resistance zone of 13,680 and 13,900 confluence with the 50-day moving average. And what's interesting over here is that if you are to shift to the weekly chart itself, from the daily to weekly, you could see that last week it ended with a bullish hammer candlestick pattern, which is after a test on the 12,430 support level, which is the 7th of March 2022 swing low area. Now let's push back to daily again. So let's have a look at the strategy chart. So the strategy chart, right, for the German 40 index for this week, right? So no change. I'll be using 12,430. So I'll give you our access slash 385, which is last week or last week low, 5th of July low. Okay, at 12,386, which is 385. So using that as my key medium-term pivotal support level, at least see a push up towards this upside trigger level, which is 13,400, which is so this minor swing high area, acting as a resistance in the last 1 month also last 3 or 4 weeks or so. As you can see, this level here, 21st of June, 27th of June, and 28th of June, all confluencing very closely to the 13,500, where price actually refused to shape a bullish breakout from that. So we're taking it one step at a time, looking for a potential push to at least retest 13,400 first in first step. But however, if we start to see a daily close below this 12,000, or a 4 hour close, but a 4 hour close below 12,385, then potentially we could see a deeper drop towards 12,030 level, then followed by 11,600 level, which is over here. All right. Okay, 11,600 level. So all in all, right, if you could look at the major, the technical analysis of the major indices that I share with you all for this week, all of them are still holding above their respective key medium-term pivotal support. So we are still looking for a potential push up on this on their respective above their respective medium-term pivotal support, as long as they hold for this week to actually play that potential 1 to 3 months of tactical rebound within a longer term major bearish downtrend phases on the major stock indices. So with that, have a great week ahead, and I'll see you again in my next video.